Are we seeing a Black Monday 2024? We need to talk about in this video. I am Dr. Stock, Doctor of Education, and guys, let's just get right into it this time. Japan down 12% with the Nikkei. Holy cow, totally Black Monday for them. And I can show you the different markets that we have from around the world. So I'll read off some of these numbers as they might be hard to see, but the Nikkei in here rocking 12%. What I want you to see just through the percent change, all the red that you have around the globe for the markets. So yeah, we're down a little bit in the United States, very painful in the pre-market hours, most likely just the start of something bigger. The only green that you see in here is the VIX, the volatility index that's in there, and just a massive spike up to 49. So that sort of spike is not normal, we'll say, to say the least. So this is something that is absolutely worth paying attention to when you see a movement like that one. And I said in my last video that I am cautiously bearish between now and the election. And this is one of those times that caution is really going to pay off as I have the short hedges out. You can go check out the receipts for that over at the Discord. I have that available for anybody who joins the Patreon. That link's down in the description. And guys, there's some technicals I'm going to describe in this. You're going to see that this is something that that has been sort of been being written out for a while for us, spelled out for a while for us. That just needed the right triggers. And you can actually learn to do that technical analysis using the link for the course down in the description for technical analysis trading. And it totally can be worth your while. So with that said, let me show you the monthly chart for SPY that kind of tells us, along with some other catalysts that are out there, that there could be some trouble brewing for us. So this is the monthly chart that we're looking at. So this goes back, this top trend line that you see here goes all the way back to 2009. So following the great financial crisis that you see back there, that we started that upward run, you can see where we have the top here, top there, and there's the confirmation that we have as we start to come off of that. And then you can see along the bottoms, this is a rising wedge formation. And we actually have a fair amount that we could come back down. This, like I said, it could be just a start. There could be some bumps along the way. Most likely we are in for a bit of a mess. So we'll see if just the Japan thing, but I have a whole list of things for you. In the meantime, this is massive bearish divergence that has been taking place. By the way, the pandemic marked the first bottom here, and then the bottom of the market in 2022, and then the bottom of the market in 2023. And now where are we at? Top trend line, starting to get a really large, every candle here, this is the monthly chart, so every candle here is 1 month worth of time. And you can see this massive candle that we have. And August is just going to keep on moving down for us. That's going to be a huge red pepper, if you will, moving down this way. And this could be very messy for the next while, given all the number of catalysts that we have. We'll get back to technical analysis in a moment, and I'll tell you more of what I've done for some of my short hedges that I put out there that should be paying pretty well. Now, mind you, I understand the pain that goes along with people that are positioned heavily with long positions, hopefully not in margin for a time like this. I've been building up my cash pile. Do you know who else has been building up their cash pile, by the way? Warren Buffett, which is actually one of the catalysts that we have out there. And who am I to pretend that I would know better than him? So if he's building up a cash pile over just quarter after quarter reporting that they keep on saying nothing's cheap out there, well, then nothing's cheap out there, right? So I've been looking around. It's been hard. I've been very slim on buying long positions in this sort of market for a lot of good reasons. So the world markets, I've already discussed the fact they are down. That has a weight on the US markets as well. So US markets down for that reason. Geopolitical risk, the whole thing with Israel right now, and attack possibly coming from Hezbollah. We're going to have to see how that comes out. That can get really messy really quickly. And if you don't believe me, just take a look at Lockheed Martin Technologies, LMT, I believe is the ticker symbol. They're going to be green this morning, most likely. So if you want to know, is geopolitics really one of the catalysts that we have going on? Matter of fact, I'll actually mark it down here on the paper to pull up Lockheed Martin, just to show you, they're most likely up. Fed cut being over tightened, them cutting rates means that we can potentially get then a drop in the bond yields that are out there. Well, what's happening right now is that we actually have aggressive bond buying right now, is that we have people trying to lock in those high rates with a bit of a flight to safety move. So what you're going to see when you look at ETFs today is most likely you'll see fixed income assets, the bond, the debt that people would take on and trying to draw the interest rate, that cash type trade that you would have out there. That is something that is going to probably do pretty darn well today, while the rest of the markets, the rest of the ETFs that are out there, the equities themselves, probably not going to do so hot. So we're going to have to watch and see what today looks like. Like I said, today is one big leg down. Most likely we're going to have a bounce sometime, and then we're probably going to have a further sell. So we're going to have to watch for that. It's probably going to be one of these, you know what I mean? Like a up, down, up. I'm sorry, I mean down, up, down. There we go. Make sure I get the directions correct, but there will be a bottom to it. And through technical analysis, link down in the description for the course, we are going to be ready for it. By the way, there is a code word, Dr. DOCTOR. Using that code word to get massive savings on that one. All right, what else we got? Unemployment rate, 4.3%. Fed staying too tight for too long. Recessionary fears going for us. High stock prices. High bond yields, which means low bond prices themselves. Those two things are inverse to one another. And as I mentioned before, Buffett's massive move to crash. By the way, selling half, this past quarter, half his stake in Apple. So we have a lot of catalysts. They're all culminating onto one day. So here we see it. Most likely it's going to cause us to have some trouble until we actually have some good news, some silver linings on the horizon. We're most likely not going to return to higher highs at this point in time. So not to sound overly bearish overall, but for today, most likely that red is going to be pretty darn red. So let me put this back up here. So the stock market, here we go. This is the Russell 2000. Might as well start with the small caps. Check out all that red that we have in the Russell 2000. A lot of these don't have a lot of pre-market trades. That's why you see a lot of the gray that you do with very little green in here. Let's step it up to the NASDAQ 100. NASDAQ 100, which is also going to share companies with the S&P 500. S&P 500 is going to have more companies in there. Amgen, for some reason, up a little bit. Mondelez, I think is what that one is, up 1.5. There's like 3 stocks that are actually up in any serious way right now in the NASDAQ 100. And if we go to the S&P 500 on this one, you can see just a ton more red waiting for us. So let's move on from there. Here you can see that drop in the bond yields. If only there was a way to predict that. Wait, consolidation pattern broke out, retested, rejected, drop. So this was something that I had drawn on here about the time that we got, I think this part in time, about the middle to end of June is when I had this drawn on here. And you could see by the time that we hit the end of July, that is where we get retested and rejected from there. Mind you, even if you go to the US 20-year Treasury yield, which I had even more technicals on this. Why did I have so much drawn on here? Well, you see, and you can see I even call this critical support in the fact that we broke down through it on this one. Yeah, we tested, then we retested and bounced a little bit, failed to make the top and really fell down through the floor on this one. TMF printing big time on this one. Finally seeing that sort of payoff. Bond yields, which are opposite bond prices, big old sell-off. So when you look at TMF, that's one that has spiked up. And what, mind you, I was also tracking that one for a while as well. Had that last bounce off of support, and then boom, rocket ship up today, up almost to $61 per share of TMF on that one. All right, over to the SPY. You look at the SPY, I showed you the monthly chart on this one with the bearish divergence that you see on here. So the fact that prices are up, momentum's down, that massive bearish divergence. This is one, mind you, on the monthly chart. Look, if you remember the mess of 2022, we just kind of danced around 50 on the RSI, just danced around that momentum. Us drawing back down to 50 is going to be absolutely huge, but don't expect to come all the way down to 30. If we do, something's massively messed up. And if we were to get down that low, that would be a time that I think would be significant peak fear and almost a guaranteed turnaround. But mind you, in the history, the great financial crisis actually pushed us down below 30. If we go back to the dot-com bubble, that actually pushed us down below 30 on a monthly basis. So getting down to 50 is going to be really significant for us. Watch for that. That's the first significance that we have on the monthly chart. Let's go down to the daily chart and see what this looks like. Now, if you watched my last video, or even better, if you were in my stock group, you would see what I had on here with the technicals and also with the price targets that are on here. We actually blew through the first price target at 520. Our next price target is the 200-day down here at 500. So a significant drop in order to get down there. We do have a small stop around 508, 509, according to the Fibonacci retracements that's on here. So also QQQ, also have this over at my stock group. You could also see it in my last video. I share them while the market's around and while we actually have opportunities to trade on them. Now, mind you, there's still opportunity on YouTube, but some time has passed by the time I can actually get these technicals not only out to my stock group, but then also record videos on them and push them out to YouTube. So if you want the most updated information, I'm just telling you that Discord available through the Patreon link down in the description, that's going to be a good place for you. So price target on this one, 431. We're already down below the 200-day in pre-market trading. We could bounce a little bit off of that, but selling down below it, price target 2, right down around 411, which is where we bottomed in April. And if we actually change the look on this a little bit, we'll narrow it down here. There we go. What the heck does this look like? Well, if you go all the way back to 2021, beginning of 2022's highs, that actually drops us back down to closer to 400. So if I were to put a price target 3 on here, it'd be at about $400 per share on the Qs. But mind you, SPY had a short hedge going into this week. That's going to print. QQQ, I had a short hedge with SQQQ. Actually, I have a short hedge, and I also had a volatility play. Both of those are going to print beautifully. And now, mind you, the call option that I had out is going to cost me like 47 bucks. On the plus side of that, it's going to be a couple hundred for the short position. So that's going to be awesome for that. I did not have a short hedge out because of how pricey it was for IWM. But if I did, we're right around 200 on this one. Mind you, not as overbought as we had for SPY or QQQ. So for the S&P and for the NASDAQ 100, the Russell 2000 stocks never quite got to make it back up. And I said when we peaked up here, we most likely were not going to go back to all-time highs on this run. It was most likely going to be down for a while. It's going to be painful. We'll find bottom, and then that next run that we get is most likely the one that sends us up to all-time highs. We do have to find out where that bottom comes in on this one. BTC, totally shorted this one on Friday. Going to print big time for us. So a little bit of mess coming up. Had those short hedges out. Got a lot of cash that I'm sitting on. Not a lot of it deployed into long positions over the last quarter or so. Well, because I felt the same way that Warren Buffett did. And like I said, who am I to argue? I'm a guy on YouTube who loves to do trading, loves to do options, tends to do pretty well with that kind of stuff. Not on Warren Buffett's legendary level. For sure, like I said, who am I to argue with him? If he's been moving to cash, most likely there's a lot of reason to not be too well invested into something like to levels where I'm taking on margin or anything like that. So instead, build up the cash position, took short hedges where it's been opportune. Is one of those days that it's probably going to pay off for us. Bitcoin, by the way, about 52,000 is about right, and we're at 51.4. So where does it go from here? Well, we could easily sell off if we zoom out a little bit more. We actually start to catch support right around 45,000. So if this thing pushes down even harder, we'll see if 45,000 holds up for us. If we do, we can get a significant bounce. We have a bit of a shelf right around that $45,000 level. So be on the lookout for that to happen if we break down through that 52-ish thousand level. Now, mind you can see some of the peaks in here. And if I zoom in on this spot, which is where we had that hiccup going all the way back to February, you can see that we kind of got stuck around that level. And guess what? We're once again stuck right around that level. That momentum pushed us down through. On a daily basis, we're overbought, took a little bit of a bounce, and we could have a little bit of a recovery that's in there. Now, mind you, I think Bitcoin, I said this before, I think it's holding up as well as it is because it's not just a risk asset in a lot of people's minds anymore. It is also, in some ways, to some people, I think it's also a flight to safety play, that it's one of those things to hedge world markets, if you will, different world currencies that are out there. The fact that it can't be inflated away on you. I think some people are like, you know what? It's been pretty messy. It's been pretty gross recently with the inflation that we've expected in the U.S. and around the world. Bitcoin doesn't look all that horrible sometimes, and there is a lot of upside opportunity to it, which actually outweighs the downside risk. If you're somebody who believes that Bitcoin is going to go up over $100,000 per BTC, well, then you have 50,000 that it could go down to drop you down to zero, and 50,000 up to take you up to 100,000. That means it's 1-to-1 risk to reward right now. And so finding that balance, we're also at kind of a critical time there. Now, mind you, there's people like Tom Lee out there who say that it could go even higher up above that. It could go massively up above that, well beyond the 100,000. Well, if you're one of those people that's like a mega bull on Bitcoin, well, then your risk to reward ratio is actually pretty darn good right now. That it's well beyond even 2-to-1 by that point in time. So let's move on from there. Shorted Bitcoin. Tesla. Took out a short hedge against my Tesla shares on Friday. And today, it looks like it's going to pay off. I used TSLL on that one. So that one, a significant drop that we have, broke right down through that area of support that we sat on to close last week. And now we have this area of support down here, all the way down, by the way, to 170 and up as far as 186. So we'll see where we happen to get if we bounce off the top of this thing. We are in that free fall zone. You can see the prices did fall right through support into that free fall area. And now in the pre-market hours, sort of catching its breath, if you will, kind of like just keeping its fingers crossed that we don't get a further fall from that. So my long-term positions, by the way, haven't touched them. So they might sell off, going to experience some unrealized losses there. But I think that when we go to pick up those pieces with the cash that we're sitting on and the money that we make on the way down for something like this, that it's something that could significantly benefit us by being able to get cheaper shares and increase our cost basis. Now, for the big one here, Nvidia, gap to be filled from 95 to 102 in the pre-market hours. We're down to 92. Yes, I shorted Nvidia on Friday as well. Now, I had somebody try and call me out on, I think it was Thursday or Friday of last week. And now, mind you, if you haven't read The Man in the Arena about It's Not the Critic Who Counts, I have a lot of conviction in what I do. I'm out here trying to share opportunities with you guys, share information with you guys, trying to provide for my family, protect my family financially, doing the best that I can. I have a lot of conviction in what I do, and it takes more than any critic who's out there to steer me away from what I do. And they said, I thought you said Nvidia was going back to all-time highs. I gave the person timestamps. I said, look, here are the timestamps from my 2 previous videos that said what needs to happen. One of those things that needed to happen, we needed to stay above 115 to 118, which is all the way up here, and we got rejected. We got rejected hard. So because we didn't stay up above that, instead we sold down, we lost that. That makes it much more difficult to get those all-time highs. Fast forward to today. Now, mind you, I shorted because we did get rejected off of that. That helps me out with being a long-term investor in Nvidia. And I've also been saying that I'm a buyer when we get down into 2 figures. Might take a little bit today in long positions. Not a whole lot though, because we got to find out where that bottom is. But mind you, we have all the way down to $80 per share before we get down to the 200-day on Nvidia. And I think that sets up an even bigger, massive opportunity. So long-term bullish on Nvidia. Still haven't changed that stance. Are we getting to all-time highs by the time that their earnings come around at the end of August? It really does depend on the markets, because the markets are the floor and Nvidia would be a launching point from that floor. If the floor drops out, it's kind of like jumping in a down elevator. It's hard to jump higher when the elevator is moving down. So that's what I see for right now. Are we going to all-time highs for Nvidia by their next earnings? Right now, it's not looking like it. Does that mean I've changed my idea that Nvidia's a rock star company? Well, nope, not yet. So for this one, took out the short position on Friday. It's going to pay handsomely today. It's going to be wonderful. It's going to pay for quite a few shares of Nvidia. Pretty excited about that one as well. And like I said, guys, be careful out there. Make sure that you're doing whatever you can to protect your capital. Maybe you've already taken short hedges. Maybe you're one of my community members already. Maybe you've taken advantage of that technical analysis trading course. That link is down in the description. So is the link for the Patreon. You can come and see how I'm playing this market. You can talk to me and my community members that are over there. It's absolutely wonderful, especially when the market has downturns like this, to have that sort of support behind you. And, I hope to see you over there. I hope I get to talk to you. Sometimes we can allay each other's fears. Sometimes we can help prepare each other. You can most definitely always see what I'm buying for this. You can see how I learn how to make extra cash in either direction on markets like this one. And if you guys don't want to wait for my videos to come out, you want to do your own technical analysis, you want to understand more of what's going on in those charts, that link down in the description for the technical analysis trading course. That's exactly what you want to go to. And you most definitely, when you sign up, you want to use the code word DOCTOR, D-O-C-T-O-R. That promo code is going to save you huge on that course. Guys, thank you very much for watching. Be careful out there. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.